Letting your winners run is a hard task for many traders. So in this video I'm going to talk about 3 ways to let your winners run using technical analysis. The first way is using moving average. Moving average is a great tool in trading that can be used in many ways. One of the way is I use to let my winners run. I will show you some examples on trades that I took. The first example is on Twitter. I set to buy in this area. So Twitter did dip in our buying zone and we started buying this area. And after a few days, it did reach target, the first target, which was around 10% profit. I did a big mistake here and I directly took profits. And I said in the chat room to follow the 9 EMA line to let your winners run. So here the 9 EMA line we should have used as a support line. Whenever the price stays above 9 EMA line, we can hold the positions because whenever it stays above 9 EMA, it's still bullish. So if I used 9 EMA as a support or as a stop loss, I could make an amazing 50 to 60% move. But unfortunately, I did not. So here you can see the importance of letting your winners run. You could make 60% win by risking only 10%, which is 1 to 6 risk reward ratio, which is super amazing. So in the long term, if you let your winners run, you'll definitely win much more than your losers. Here's another example on NK that I set to buy at 21.01. This stock had a high short float and it did this breakout, which the shorts will cover, which makes a short squeeze. And I did a mistake on this trade again. This stock made 20 to 30% move the first 2 days, 3 days of trading. And whenever the stock makes this kind of move, I'm used to take profits. But if I use the 9 EMA line, I could let my winners run. As you can see, the stock made an amazing 80% move and still running. So we should have used the 9 EMA line as a support or as a stop loss. You would definitely make much more profit in the long term. Here's a third example on MMM. 3M company, after that we bought, it made a great move and it did reach my second target, which was around here. But unfortunately, it directly dropped. So we could not follow the 9 EMA line. If we followed the 9 EMA line, we would just take profits after the first target. But it did reach my second target. So here comes the second and third way to let your winners run. The second way is pretty simple and straightforward. It's simply to reduce positions when the stock is going up. So this is one of my favorite trading setups. So here, let's consider this is our buying zone and this is our target range. It can happen a lot that the stock does reach my first target and drop, or second target then drop, like it happened on MMM. So after reaching the first target, we can follow the 9 EMA line. But once it reached the first target, we can start taking some profits. For example, when it reached the first target, you can reduce 30%. The second target, another 30%. So a stock like MMM, after it did reach our second target, we took already 60% of our profits. And the rest of your position, you can simply follow the 9 EMA line like we did on Twitter. And like this, you'll never feel missed out on any trade. So let's get back into MMM. So after it reached the second target, we already took 60% of our profit. And after it did this big dip before touching the 9 EMA, you won't feel like you did a bad trade because you did not take all the profits here, because you're taking profits on the way. And after this, if it did like Twitter, it pushed more, you would follow the 9 EMA line. If not, you'll follow again the 9 EMA line, but you'll take less profits. So probability speaking, this is the best thing that you can do to let the winners run. Here's another example on Facebook, FB. So after that we bought here, it did push the first target, I took 30%. And after that, this was the 9 EMA line before doing this big dip. Whenever it touched the 9 EMA line, it closed below 9 EMA, I took profits. So the second way is to take profits on the way. And the third and my final way is using bullish divergence on RSI or the marker indicator. If you don't know what's a bullish divergence or what's the demarker indicator, I highly recommend to watch this video. So here's an example on the bullish divergence. So here Fox did a larger drop than expected. So how you can decide if you should hold the stock or just take profits? It's using RSI or demarker indicator. You can reduce your time frame, for example on 30-minute time frame, and you can see the stock doing a bullish divergence. When the stock does a higher high and RSI does a lower high, that's what called a bullish divergent. And this kind of setups are really highly probable that it goes to your way. On this case, for example, on bullish divergence case, on the upside. So this is another way to let your winners run because it did a larger drop than expected. You're not fast enough to take profits. So based on this technical analysis, you can decide to hold longer. Same thing with FTX. On a 30-minute time frame, FTX did drop. And here you can see it did a higher high. And on the demarker indicator, it did a higher low, which is a bullish divergence again. And check the results. This kind of setups are pretty good for buying opportunities. So here it was a great buying opportunity for a bounce back. So this is the 3 ways that I use to let my winners run. Hope you learned something new today and see you in the next video.